Hey everybody, hey traders, happy Thursday. It is just after 11:15 a.m. Eastern. Going live for a little market review. If you're out there typing a wire yes, jumping in the chat, I'll bring this up. So I'm in a new spot this week. I'm in a Florida office and working remote. Hopefully everything comes through loud and clear. I turned off my camera, but just to show that I am here and alive and well. Happy Thursday, everybody. I just want to save some of the bandwidth, so I'm going to turn that camera off. There we go. All right. So let's talk where things are at right now. Looking at the ES feed for the E-mini futures on the S&P 500. Chart alarm set to the downside, and I'm looking for. Let me bring up my drawing tool here. And see where this populates on my screen. There it is. Okay. So we are scenarios. I mean, realistically, news came out today. Let's go to the calendar. We had the JOLTS job openings on Wednesday. We had non-farm. It was ADP non-farm today, which also was a big miss. This is probably not the greatest thing for the U.S. employment scenario to have a forecast of 144 come in 99, to have a revision from 122. We have, of course, the major non-farm tomorrow. But let's talk about all that. So we had ISM numbers for the US came out at 51.5, which was slightly better than expected. Services PMI is hanging in there just above, but the manufacturing, of course, has been below 50 for a while, which, arguably is tomorrow's news. We have CAD employment in the morning at 8:30, along with non-farm payroll forecast for 164. I really think the more important metric for tomorrow, yes, the job number is important, but this 114 to be a good sized upwards. Or if we miss, that's probably not a great thing. But I think this unemployment percentage is going to be the most important factor tomorrow that gets kind of priced in if there's any type of volatility during the day. If we remember what happened when we printed 4.3%, that was the SOM rule getting activated. And that is historically, that's been an undefeated indicator for a recession. And percent unemployment lows to now 4.3. That's a 0.9% increase, which is a lot. But the reality is, are we going to improve on that? Are we going to stabilize? Or are we going to continue to see softening labor markets and more the U.S. economy? Or at least that's the feeling out there. Now we go back to the charts, which ultimately is what matters. Look, having this initial drop Tuesday morning and kind of putting in the full-on September effect, you got to wonder. I mean, look at what August did, right? August was here from the 1st down to the 5th, and August finished the month positive. Okay. Now, to what degree positive? This is where volatility really matters. I mean, we started the month right here at the open, and for the month, we finished around 1.63%. Now, the average September performance is historically not terrible. The last 10 years, September has averaged about 0.9% to the downside. For the last 70 years, it's averaged around 0.7% to the downside. So it's not a historically bullish month, but it doesn't mean it's the worst time ever. So I could see the markets doing a couple of things. If we have, more volatility to the downside, we could have something a little bit scarier happen where we have a high to low, lower high to higher low, lower high to higher low. This to me would make some sense that the market's just not quite convinced what direction to go. I don't think that the bears necessarily have what it takes to take out the August 5th bottom when things were really as the crescendo of the SOM rule getting activated, deleveraging in Japanese yen. The Fed was actually pushing the market higher going into August, but it wasn't enough. And it was just a lot to take in such a short amount of time for a Thursday, Friday, Sunday, Monday. That was one of the nastiest spills we've seen in a long time. Not to mention the Nikkei had one of the biggest two-day drops in its history. But if you look out for some type of 10% correction in the S&P or 15% correction in the Nasdaq, you look out 12 months, the market's typically higher. So I think right now, I mean, September's drop that we saw right there just on Tuesday is enough to put the market on its heels a little bit. I could see us coming back into these levels. So, I mean, I I wouldn't mind 5450 or 5400. I do have some trades that I'm running on that. And basically, I'm just long puts on the ES and long puts on MES. I have some spreads way down here out of the money. I have some spreads up here. So some broken wings, for example, up here, some broken wings. Actually, there's some credit spreads down here, and then some hedges. But also in the near term, I have MES to the upside. I have MES to the downside. And more than likely in the short term, I will protect some profit. If MES, for example, that's the micro E-mini feed, which is going to look a lot like the ES feed. Chart alarm set here. I have some good levels in the volume profile. Now we're a bit sticky around this 5,500 zone, but if we can break through 5,500, to me, this opens up the run towards 5,400. And you see this little gap here. This is a volume profile indicator. This means that we should be able to travel pretty quickly from, let's say, like 5,450 down into this like 5,400 zone, and possibly even lower than that. So I think right now, I mean, this was a cluster of support. If we can break through that support, it does open up the floodgates to go a little bit lower. I have a couple of pinned trades in here for some butterfly spreads. I have some long puts that right now, let me see if I can bring over my broker platform. So my MES feed, let me go to this particular account. MES feed, it is, that's on the call side. Put side. There we go. So right now I'm up about $900. Here's a look. Right now about $900 on per account, on a bit of a hedge. Now I could protect it, but I'm out to November. I want to see if this September effect is certainly starting off on a rough note, which I think is a good thing. I took these trades actually. I want to say night before Tuesday's open, which obviously helped out pretty nicely to get positioned for that big drop day on Tuesday. But I'm looking for, price to fall around 5,405. This is the MES feed, ES feed, which would bring the SPY somewhere back into this structure around 540 to maybe 535. Take a look at the volume profile again. It's pretty empty below this 540 handle. So if we can actually get down, push down to 540, there's a little stickiness over here. But if we can break through 540, we're talking about 535 to 530 are the next big levels. Let me just be super surprised if we have this range and this range. I mean, if we just went side down and then back up and then down, that's a lot of volatility and a lot of chaos in the market, but it's still contained within about a 10% level. I'm terribly surprised if we have slightly, and this is a little bit easier to see on the ES feed. Let me go to the ES feed. Here where we had slightly higher highs. This one where we have slightly lower highs. Now this could be a channel if we're going to break these lows, or we could have a bit of a wedge like this. So some indecision is what. Now, how much lower, not necessarily about anything. I don't think there's any reason to be. I think you just keep the trade sizes small. You pick your battles. You collect your income term. If you're currently hedged, I don't think it's a bad spot to be playing a little bit of a bearish angle right now. And so expirations for my bear trades are essentially out to the end of September into the middle or end of October that I'll look to protect. I'm not looking to say I'm going to be bearish and have this thing, you got to crash. I don't want that, nor do I expect that. And for me, my bear trades are, this is a good bear window for me to be profitable. Turn the MES trade into about $1,000 or $1,500 per account. I think that's a pretty good hedge. Everything else just kind of stays. I'm still long on gold. I'm still long on silver. I still have some plays in Bitcoin. The one I want to take a crude oil. We're trading CL, or I'm trading CL, and I'm curious. I mean, maybe the best position here on CL would be, I mean, if I want some premium, I'm going to have to puts, but I think that's silly in case we have a crash. I don't want that type of exposure. So if I sold a put, I probably have 2 or 3 long and make sure that I'm properly hedged, and also let the long puts kind of outweigh the naked put. So I'm kind of neutral and trying to limit some of that crazy risk. But I don't think it's a bad spot to look at some defined risk. I mean, you're trading at 70. Let's look at this recent low. Could we drift a little bit lower? Yes. Here's what I'd like to look at. Let's go to USO for a moment. This is a little bit easier to see. I can also, kind of plot out what I expect to see for a fill. If I go to USO, and I guess the difference here on USO is we've been $65 down to $60. If I go to the CL feed, this supports a little bit more term. So I think what I'm going to do here is I'm just going to wait for maybe a 67.25. I'm going to go 67.50. Set a chart alarm on CL. 67.50. And then cred level. So I don't mind taking a defined risk. That would look something to the effect of, let's go /CL. If I go out to, let's see, 42 days gets me into October. 71 days would probably be pretty decent for premium in November, and see what that looks like. So 60, what did I say that was? 750 on CL. Okay. So I put right here. That's a sell put, and then I have a long put that's hedged against that. These are kind of offsetting each other right now. It looks like I'm already using a November expiration for sell put by 55. Now I'm talking about a price here around 60. I want to look at trading something very to 67.50 by 67. This isn't too bad of a play. If you can see my number, about a 20-cent credit spread on CL, I'm risking about 280, 210, about a 60% chance of winning. Now, right now, that is out of the money. And if I wanted to, what I could probably do with it for maybe 25 cents. So let me see what the math is on this. So if I do 25 cents, I have $50 profit per contract for a risk of $250. So if I wanted to put in a pending or try to get that filled at 25 cents, that's not a bad play. That's just simple risk to find. That trade, that's right at support. If we can 67.50, what I'm basically saying is, could I take this trade here, sell a 67.50, buy the 67? If price goes above that or stays above that 60, I'm risking $250 to make $250. I think that's a pretty good play. If I feel like I need to stack up a bunch of orders here, but maybe doing something along the lines like so, I might get a little. And why is oil dropping so aggressively? Well, we have a huge slowdown in global demand. I know China's pretty much been offline for a while and very quiet. I also know that U.S. production has been at record highs, and it looks like Libya was threatening to cut off all production, and all of a sudden re-engaging in full production or capacity. And with slowdown, supply and demand factors, and we've had Middle East tensions, but that hasn't raised the price of oil. So hopefully, let's say conflict avoided, we see some stability here between the 67.50 and 65 zone. What I might end up doing is 67.50 by 67 for one credit spread, and then doing like a 62.50 by $60, and try to get them filled for the same price, but do a one contract trade here and a two contract trade here to see if this support level actually holds. So let me take a quick peek at those for some income plays. I don't think that's a bad spot. By the way, I'm going to jump into my Discord for a second here. I'm not seeing any chat coming through. So let me quick. I'm live on YouTube and Twitter. Are you seeing the chat? So I'm not seeing the chat come through. So let me pop it on my phone here. Make sure I can keep up with some comment to studio. And currently dashboard. Pushing to my live channel, of course, or I'm just talking to myself just for fun, which is probably always the case. Right now, okay, just let me double check something. All right, very good. So all right, we're good. I see the chat coming in. That's good. So I think I'm going to take a trade CL. Let's do a 67.50 by 67. This will be a cash settle. There's potential moves down to 65. If I guess what I kind of like that 65 zone better. So here's what I'm going to do. I'm going to place this trade here. So I'm going to go 60. Let's go 65. 65 by 60. Try to get this filled for 50 cents. So what this means is if I get this on oil a little bit more, see if this will go up towards 50 cents. If I get filled at a profit of $500 for risk of $500, and my expiration's out to November. Now this is surrounding a naked put that I have at 65, but that is also covered and hedged with a $55. I think it's 55 or 50, $55 long put to kind of offset that. So that's a separate trade, 65.50 by 64.50. But if I buy this put, that's going to offset my naked put. So I'm going to spread it out by $1, try to get this filled for 50 cents. So right now this is going to be a pending order. And I want to see if price can drop a little bit more and get me filled around 50 cents. So this will be pending. You'll see that this will be a $500 profit for $500 risk. It's only going to tie up about $430 of buying power, which I'm totally fine with. So let's do right there. You see $500 with the commissions after a futures trade is around $491, reducing my buying power about $432. So that is a 65.5 for a sell put, 64. And I am placing that trade here. This is going to be pending. So review, and this is going to be good till canceled. Net credit good till canceled. Yep. So we're good. All right. So let me send that order out. Very nice. Where'd that one go? I could have swore that was it this account? Nope. This account? There we go. There's my pending order. Okay, so now I can place this in all the other accounts. 50 cents, currently trading at 33 cents. You joining me from Facebook? Pretty cool. Yeah, I can see that on my restream. If you're on Facebook or on Twitter, live. Nice to have everybody here. Chart alarm's going off here. Let me check that in just one moment. We've got MES going to 5,500. Perfect. That puts my hedges up a little bit higher in profit, which is nice. MES on the daily, I'm looking for that flow down towards 5,400. We're getting a nice little break today, which I'm certainly happy with. Also, what's nice about my MES trade is this through the day, I may get out of this trade prior to non-farm payroll tomorrow, just in case this market wants to jump up for non-farm for whatever reason. If this jumps up, that's going to offset some of my profits. So I'm up maybe $1,250 to $1,500 per account. I'll show that in just a moment here. So let me take this trade. Let's go similar amounts. Let's go this one here. There we go. Okay. There we go. 45 seconds to get these orders placed. And oh yeah, I'm waiting for fudge. I'm waiting for a settlement on CRWD. I think I got assigned on CrowdStrike. But like exercised long put and shares combo, but liquidity is probably going to close me out at the end of the day. So I'm going to get these placed out. So I'm going to go 151. And I'll get those placed. I'm not in any hurry on CL, so I can place those tomorrow to make up those. All right, so those are all placed. Now let's go into my track record. Add that in. Steps and steps and steps in the trading journal. Let's go to CL. So this is a /CL credit spread. Looking for expiration 65.50 by 64 for 50 cents credit. $50 or $500 reward, $500 risk, and I'll put, and that's also, all right. So that's in my, at the end of the day, if you can see my screen here, this account will settle in for CRWD for about a 75 cent, 300 shares. And so it took away all my buying power on CRD. So I need that to settle in. I'll actually, that's a good kind of example to walk through. But these three accounts are going to have it settled by the end of the day. I talk to the trade desk all the time at Tasty, and I know how the thing works. I mean, their risk team is going to send. So what happened was this. If I go into the position here, you can see I'm up $971 in the MES head. If I go into CRWD, I was assigned 300 shares, but with that assignment, I still have a long put for 285. So initially, I collected $3.47 in the dollar here. So when I took the trade, I collected about $1.70 per side. So when I had a 290, or I'm sorry, 287.50, that was actually my assignment price. So you can see right here, the 300 shares were assigned at 287.50. And so that takes care of that. $1.78 on that credit spread. So that gives me a break-even cost. And then on top of that, I have a 280. I have a 280. It's essentially like a hedge, but it's a long put. Now, I don't want to keep the shares of CrowdStrike. I'm an options play where I need price to see if it can go another $5 or $6 lower, and then this in the money gives me some partial profit or full profit. And I'll see what that looks like tomorrow. Nvidia, same thing. Probably 75 cents out of 3 to 5 contracts on Nvidia for profit tomorrow, as long as we stay below 112. So anyway, let me do the math here. So if we go 287.50, so 287.50 minus the $1.78 gives me a break even of 285.72. Now, I also put at 285, actually. That's supposed to be 285. I have a put at 285. And right now, the 285 pricing about 72 cents of risk. Everybody see that? So for a 250 spread, 250 minus the $1.78, I have 72 cents in risk. So what I put 85, okay, for the long put, I'm trying to, along with the shares that were, ends up being this. If I close it for $285, it means that I initially take on the same risk of 72 cents, which is the plan. The broker pending there, $84.99 just to get filled. When this settles, I'll lose 72 cents on the trade. On this one here, I've generated $1. On the bear call, $1.78. So I make $1.78, lose 72 cents, and I traded it both directions during earnings. So all that means is I can lose one, win one, walk away with contracts. That's $300. So hopefully CrowdStrike will go down a little bit more tomorrow. If it hits 250 or lower, that should give me something to protect. On Nvidia right here, I have the 112 by 113. Oops. The 112 by 113. If Nvidia stays below 112 tomorrow, rate 75 cents per contract on 3 contracts. So that would be, I lost 25 cents on one. If I make 75 cents on the other, I net 50, gives me $150 income on Nvidia, and I played it both ways. One, win one, walk away. If I lose one, win one on CrowdStrike, I walk away with bucks, right? So not a bad. My hedges, like I said, on MES, doing fine. Let's see if they go lower. I'd like to see these over $1,000 in the short term to take, so that's fine. And let's see what else is going on. Let's check Telegram for a second. Telegram, we're good. Very nice. So we're pushing lower. I'll keep an eye on this through the day. I still have today as a travel day. I'm going to the airport around, I probably have to leave around like 2, 3 o'clock today, which is fine. I'll get back late, and then I can check on things when I get back tomorrow morning. I will be live in the AM. for my weekly payroll. We'll see what the market's going to do. I may protect my MES hedge. I might, if it's a disappointing NFP, I might, I don't know. I don't, if I'm up like 12, I'll probably just take the profit, although I will shortchange and sacrifice a little bit if we end up squeezing down here towards 54. But to offset that, I also have another play. As always, it's like, that's what's kind of the coolest thing about options is you can stack up trades where, if price goes down or up or sideways, you can stack trades where you can make money in any environment. And my favorite strategies, I know it might be a little complex, but if the market goes up, down, sideways, and I can lose and lose and win, and I still make money, why wouldn't I trade that way all the time? And that's what I do a lot of, especially when I'm trying to make sure I'm protected, up or down. Obviously not trying to, shortcut or shortchange any profits to the upside. But if it's an income play, I don't really care what direction we go. If we go somewhere or nowhere, I just want to have so I will be watching those things pretty carefully going into tomorrow with some of my expirations that I have out for. But it's nice we're breaking below this fresh low. Also this morning, if I take a look at this workspace, so my trade this morning, I grabbed some quick profit this morning on the SPX. And we can see that we did end up breaking lower for the day, which looks like, oh my gosh, this market's down, 0.6%. The Nasdaq's down 0.4, the Dow's down 8.5. Right. Everything's pointed down for the day, and it didn't really matter because there's income right there. One trade I'm watching as well. Let me see if I can bring it up here on the Tasty platform. This is a trade that is going to set up and expire tomorrow. So I'll show you this one right here. This should be an MES feed. Where did you go? Oh, ES feed. There we go. So I put in a 54.35 and spread that by 40. Analyze this position. And this is my current trade. So this is an example of prices right here in real time. If we continue to slide a little bit lower on this ES feed, I start to ramp up these profits where I can take this trade is roughly about a $200 risk for a potential $2,000 profit. Now, to make the $2,000, that's the slim probability. But what's nice is for my max risk of 200, slide lower, this thing climbs to 4, 6, 800, 1,000, 1,200. It climbs really quickly. If I'm in this pin area, if I'm in this kind of profit trap at all tomorrow. So we'll see. And it's a stab where I'm taking a very small risk and potentially a nice payout. So if we see the case, I'm going after some, liquidity levels and some efficiency levels and some profile levels. It's great. It's a, huge profit potential. If I'm wrong, I'll take a small paper cut and I'll, try to position this for something next week. But that's kind of my up, down, sideways. We are leaking a little bit lower. So starting off with an aggressive move on Tuesday. This was all Tuesday, by the way. Tuesday was a massive breakout day. Wednesday was a little choppy. Today started off choppy and then started to break down lower. You can see my yellow box. If I go to a bigger time frame, here's actually, it's easy to see like a 15-minute chart if I zoom out. These are some of the big, liquidity zones and efficiency zones that I'm expecting to see the SPX fill. So if we pull back into this area, which right now you can see that we're in it. If we come back into this chop zone, that's around 5,500, 5,450, and 5,400 is pretty important. And that's where I'm watching some of these big volume profile levels. So if we break below 55, which we're there right now in the ES feed, then I think we can slide pretty easily down to 54, maybe even faster into the 53s. But I don't think that's all necessarily happening by today, tomorrow. I would like to see it breach, maybe tomorrow as we lead into non-farm payroll, the futures market continues to slide. If I'm going to protect the MES feed that I have, I like this area right here because prices establish some intermediate lows. And so that does give me a little bit more profit potential on that trade. And I don't know, I'm curious. I'm going to reestablish, more hedges to the downside, but I think I'm okay. If I just pull in some income and I did it in a couple of days, that's good too. So, all right. Any questions you'd like to review? I typically go, high level and macro. I've got my watch list here, still, bouncing nicely off that 100.50 low. I'm watching that 101 level for some support. I still think that the dollar as a bear opportunity. The dollar should not necessarily go above 103. So if we had, it's fine. But for this indecision zone, I'd like to see the dollar hit resistance and then sell back off, especially when the Fed starts to cut in September. If they're looking at September, November, and December, does that continue to price in some aggressive weakness in the dollar? We will find out. But I'll say this and I'll repeat this for the last several months. That is, if the dollar is going to get weaker, I think that gives a lot of assets a chance to rally for the rest of the year, including the stock market, including gold, including Bitcoin, oil, including just a little bit of everything. Like dollar weakness is good for risk appetite, but it's going to be interesting because the dollar, the Fed, is right alongside every central bank. And by the way, I know that did we have any central bank stuff this week? I know that we have 6 central BOC cut, so Bank of Canada cut as expected. That was on Wednesday. We go into Let's go to next week. I know next week is the ECB, and then the week after is a bunch of central banks week, and we have the ECB on the 12th. We have CPI, PPI data, so inflation news for the U.S. that week as well. And then the following week is when the central banks get wild and crazy. We 18th, the Fed. On Thursday, we'll have the Bank of England and the Swiss National Bank, I thought. So Bank of England, Bank of Japan. Yep. So Wednesday, Thursday, Fed, Bank of England, Bank of Japan. ECB is next week. Bank of Canada already cut, and then the Swiss at the end of the month in a forecast. But that's a lot of central bank news to digest over the next couple of weeks. Does that really matter? I mean, it matters to me watching the dollar. Okay. If I see the dollar, cool. But like I said, I like to see the dollar kind of reject off this 102.50 to 103 area. If the dollar is going to get weaker, that's where I'm looking for weakness to then prevail and trying to set some type of, if there's rejection here, looking to, create some confirmation, trade a stop just above that U-turn, and then target the lows, and then want to see if we can trail it into some fresh lows. I'd like to see the dollar get below 100. If we're going to see a nice weakness trend in the dollar, below 100 means there's lots of downside here. But we also had a multi-year range on the dollar. And so that's why I'm putting 103 as kind of my breaking point, because if we go above 103, I think we're going to head back up and have a range towards one. But it hasn't happened yet, and I'm watching to see what price does. Elsewhere, oil we talked about, there's pretty good support at 70, 67.50, $65. So I'm trading that on CL. Gold isn't doing too much, but it's just hanging here at these highs. Silver performing a little bit better here the last 2 days. I still like silver to the upside. This is one of my bigger positions and one of my more aggressive positions. Right now, I'm kind of in patience mode and get re-engaged with some more aggressive bullishness. But we have to break above 30 to 30.50 on silver for me to do that. Right now, credit spreads, naked puts, things that generate some income. Let time work in my favor. And then above 30 and change, I'll probably get to some longer term call options and credit spreads and stagger my position. I also own SLV, and then I'm trading SI for futures as well. Bitcoin, we're trading at 56, and we're tilted down. There's a lot down here on the volume profile, right around this $43,000 handle. We're making lower highs. This is still after this big rally. I still think this is accumulation. Okay, and just keep in mind that I'm willing to dollar cost average into Bitcoin, low 40s. Just staying patient for right now. This is definitely a medium to long-term play for me. Just having some, calculated risk and exposure. Everything else here, Japanese yen futures. Japanese yen futures, indecisive day after a couple of strong days. The Nikkei, big drop to the downside, and still after today's candle, slightly lower as it closes. I do wonder if the Nikkei is going to be this crazy swing, settle back in here, work its way back up type of like range where, for a while, perhaps like we don't go high, we don't go lower, and there's just lots of garbage, which can certainly happen for months at a time. So if there's crazy, just expect volatility in the Nikkei, which means losses, which probably not my favorite currency pairs to trade right now. I'm still long 26. Let me take a look at bonds right now before we go. We have a 2-year, 10-year still in that equal level where the 10-year and the 2-year are equal as far as yields go, which means, if they're equal, or if they're slightly different, like right now, it's literally 1 basis point. So I mean, we're coming out of that inverted yield curve. When the Fed starts cutting, be it September or more aggressively November, December, 10-year, we're noticing near like mortgage rates, 30 mortgage at 6.35 for the Fed. Is going to be interesting how this settles over the next like 6 to 12 months. The market cuts, the mortgage rates do not, right? So we might see some benefit to a 50 to rates, but it doesn't price it in like the market does. So if we're going to see it priced in, we're going to see yields dropping, bonds rallying. So right now, TL, for example, is up to 99, which is friggin' sweet. My TLT position should be doing pretty well. And doggone it, whatever. Shoulda, coulda, woulda, doesn't make me any money. But I get in some fractional ownership of TLT and just buy another like 50 shares of TLT. But what I have instead is I have a diagonal spread out to 2026, and let's go here. TLT. So my TLT position is up around $1,900. You can see at the bottom. So here's my TLT. Here's $1,900. And I am looking to get this expiration October 18th at 103. So if we do burst up to 103, I can do the math on this trade. I think my break even, let me find exactly what the break even is. Let's go here. TLT. Okay, so my break even is I've got an $82 call plus total debit right now is around $13.26. If I get it called away at 103, I'm making $70.74 and I have 4 contracts. So I'd make about $3,100 out. So times 8, I'm making about $25,000 on TLT. And it's I don't love trading bonds. It makes sense in this, and to see the yield going down, the bonds actually rally. They're inversely related. So TLT some exposure. It's nothing crazy, but certainly I'd like to take what's a risk of about $1,300, and certainly like to see that profit, and that's net profit. So that's a pretty good return. And what do I do from there? I don't know. Maybe nothing. Maybe that's a good trade for me on TLT. Move the needle on my accounts by 1.5%, 2%, and then call it a day and then trade elsewhere. So to me, all I'm looking at on TLT is a symmetry play. So if we go low to high and higher low to higher high, that put it 106, 107 zone. Let me verify that. It might be a little bit higher. So why did I do the call at decent enough premium? I think I lowered my cost basis by around $1. I got like 90 cents on the credit for that. So let me box this in really quickly. So low to high, and then plot that with a higher low to higher high. And that symmetry puts me right around 105. So ideally, I'd say I get called away around 104 to 105. I'd be pretty happy with that. I've got it called at 103 right now. If price goes through this high at 100 or 100, this is run up there. We have until October. If we blow through 105, then I can obviously try to roll a little bit, a small loss on the sell call, but try to roll it up and net out some additional profit. So anyway, some bond exposure is not a bad thing. But I was a little disappointed to see that we're from 96.50 to 99. Like that's not a nothing move. But on this volume profile again, there's a big level back here around 94. Now that's if we have a pullback, because what's kind of nice is if we break this high, you can see that there's a kind of a quiet patch there, and then quiet patches in here, which means price could travel faster into hitting that symmetry that I measure around 105, 106. So that is a good sign. If we can get above 101 on the 10-year, I think TLT. Well, I should say the 10 years. This is the 20-year bond for TLT. This is the 1 to 3 year. This is the 7 to 10 year. This is the 20-year. But I like kind of the open space we could travel above 101 and maybe make a quick run to that 104, 105 zone. All right. Let me bring it back to the chat here. Roger, no problem. Thanks for being here. And as always, if I jump in live and it's not really the same schedule, I know there are people watching during my Mondays and Fridays. And then when I'm a tag team with A1 Trading, I usually get 500 to 1,000 people. So this week's been a little weird on the schedule since I've been traveling and I'm in Florida. but I'm heading back to headquarters tonight. So tomorrow morning, if you want to join me at 9 a.m., I'll put a note here. Friday, 9 a.m. Eastern time, I'll return live, and we can do NFP recap and discussion. On everything. So that'll be the plan for tomorrow. As it stands right now, if I don't have any other questions, then I'll let you go for today. And if you have any questions, if you're watching this video after the fact, you're not live with me, feel free, directly on my phone. Feel free to join the Discord, which is in my YouTube channel. You can join my Discord and join the community, and we can go from there. So in my Discord, I keep it pretty simple. I know some Discords can be pretty intimidating and overwhelming. So anything that I have, I pretty much keep it all in the free group chat, and then I offer, if you want to just talk Forex, talk stocks, talk options, talk futures, my YouTube links go live in here. Any blog that I'm doing every single day. Actually, I posted this in analysis yesterday. Is this it? Yep. So I posted this video yesterday in my analysis section. Any education I have, private instruction, all that stuff. I keep it very simple to follow. I have some other Discords here that are a little convoluted. So I try to keep it very clean if I can. Hopefully that helps. And that being said, I'll let you go for today. Thanks for being with me. Happy noon. Go grab a great lunch. And I'll see you tomorrow morning. All right. Thanks, everybody. Take care. Bye.